Subscribe to my channel Report Stock.
Welcome to the deep dive. We sift through the complex stuff and pull out what you really need to know. Today, we're looking at Lowe's Q2 earnings for CY 2025. And you might think, okay, another earnings report. But honestly, there's a really interesting story here about strategy, about adaptation. Our mission today is to get past just the numbers and really uncover the strategic thinking driving this home improvement giant. We're drawing from the Lowe's Q2 earnings Pro Acquisitions Drive Growth Report. So let's just jump right in. Headline figures for Q2. Lowe's hit Wall Street's revenue target, $23.96 billion. That's up 1.6% year on year. And they beat on adjusted EPS too, $4.33, which was, what, the 2.1% beat. But the thing that really caught my eye, that big swing in same-store sales. Up 1.1% this year compared to, wow, down 5.1% same time last year.
Yeah, that same-store sales figure is pretty telling, isn't it? What's truly fascinating here, I think, is how these numbers show resilience. It's not just hitting targets, it's turning things around in a tricky market. That rebound you mentioned, it really suggests their earlier strategies are, actually starting to work. And their adjusted EBITDA, $3.97 billion, and the operating margin, 14.5%, both right in line with expectations. It points to pretty solid financial health and definitely a positive perception in the market, especially with all the economic static out there.
Definitely a strong rebound. Okay, let's unpack this. What did CEO Marvin Ellison say was behind it?
Well, Ellison gave credit to a few things. Steady growth, he said, in both pro contractors and the DIY folks. Also, recovery in seasonal sales helped quite a bit. And crucially, he pointed to ongoing progress from what they call their perpetual productivity improvement initiatives.
Perpetual productivity. Okay. What does that actually mean in practice?
It means things like rolling out new tech. The AI-powered Milo Companion app is a big one. It's supposed to make associates more effective, help customers faster. And it also includes things like process improvements, better freight flow, smarter inventory management, stuff that makes the whole operation run smoother, more efficiently.
Right, this Milo Companion app. Is this just sort of a gadget, or is it fundamentally changing things for them? Like, what's the real impact?
Oh, I think it's more than just a gadget. It seems foundational. Milo uses AI to give staff, real-time info, product availability, customer history, even help with project planning. It speeds things up, makes the customer experience better. It's not just efficiency for its own sake. It's about empowering the staff. And that helps both DIYers and, increasingly, the pro customers who need fast, accurate answers.
Okay, now let's shift gears. Here's where it gets really interesting for me. This big push into the pro segment. It feels like a major strategic move. What's happening there?
It really is a major move. It centers around acquiring foundation building materials, FBM and Artisan Design Group, ADG. And these aren't just random acquisitions. They're specifically targeted to strengthen Lowe's ties with larger professional customers. We're talking about unlocking access to, frankly, huge market, maybe $250 billion they weren't really playing in before. It also diversifies the revenue, right? Moving beyond just core DIY and the smaller pros.
So they're really trying to broaden their base.
Exactly. And the CFO, Brandon Sink, was pretty clear. He said, and I'm quoting roughly here, "We expect to drive incremental revenue and EBITDA with cross-selling opportunities." This feeds directly into their bigger picture total home strategy ramp. The whole idea is to offer everything a large pro customer needs. Support cross-selling, yes, but also faster fulfillment, especially as, construction and renovation demand hopefully picks back up.
And geographically, are they focusing anywhere specific?
Yeah, they're opening new stores in growth areas like Texas and Arizona. Plus, FBM already has a strong presence in places like California and the Northeast. That existing footprint really helps improve their delivery capabilities for these bigger pro customers. It's all connected.
That is a serious play. But is it just seizing an opportunity, or does this signal maybe a longer-term change? Could they be shifting focus away from their traditional DIY base? And what about the risks? Integrating big companies like FBM and ADG can't be simple.
Good questions. I'd say it's definitely a long-term pivot. Lowe's seems to be redefining itself, aiming to be a full-service partner for pros. They see the value there. Doesn't mean abandoning DIY, I don't think, but more about balancing things out, expanding their overall market. And you're absolutely right about the risks. Integration is huge. Getting IT, supply chains, even company cultures to mesh. That's critical. If they can't make that work smoothly, those cross-selling opportunities Brandon Sink talked about might not actually happen. It's complex, no doubt.
Makes sense. Okay, besides these big acquisitions, what else are they doing? You mentioned broader engagement, online stuff, partnerships. How does that fit in?
Right, they're pretty active there too. It's quite strategic, actually. They launched a creator network, And they've got these collaborations like with Mr. Beast and Lionel Messi. It's all designed to boost brand engagement, especially, with younger people and online shoppers.
Yeah.
Meeting them where they are.
Mr. Beast and Lowe's. Interesting combo.
It is, isn't it? But it brings in a huge audience that might not typically think of Lowe's first for home improvement. The goal isn't just getting views, it's driving traffic online and eventually in store, building that brand connection. And we should also mention external factors. The weather got better in June and July, which definitely helped seasonal stuff. Lawn and garden, live goods, power tools saw a rebound. They also pushed promotions, value offers like Diago deals. That drove traffic and sales, especially since people are still pretty value conscious.
Okay, so putting it all together, strong quarter, big strategic moves. They lifted their full-year guidance. Revenue now guided to $85 billion midpoint. Adjusted EPS, $12.33. But interestingly, the stock didn't really jump much on the news. It was around $256.69, pretty much where it was before the report. What do you make of that? Market skepticism, or was this just expected?
If we connect this to the bigger picture, I think it's probably a mix of things. Some of these moves, especially the Pro Pivot, weren't a total surprise. So yeah, maybe some of it was already baked into the price, but also the guidance itself assumes the home improvement market stays pretty flat overall. They're acknowledging the headwinds. Things like high mortgage rates, affordability issues, those are still out there. Brandon Sink was cautious, saying the outlook depends on current trends continuing. So it's like cautious optimism, not a prediction of a boom. The market seems to reflect that caution, even with the good strategy news.
Right, so the strategy is good, but the environment is still tough.
Exactly. And this raises an important question, or rather a few key things analysts will be watching very closely in the next few quarters. First, how well and how quickly do they integrate FBM and ADG? Are those synergies actually showing up in the numbers? Second, are customers and staff actually adopting and benefiting from tools like Milo Companion? And how's the online marketplace expansion going? That shows operational leverage. And third, can Lowe's actually grab more market share, especially in those key pro segments and geographic areas, as the economy does whatever it's going to do? That's the real test, especially if headwinds stick around.
So wrapping up this deep dive, it seems clear Lowe's Q2 wasn't just about hitting the numbers on a spreadsheet. It really showed a clear strategic shift towards the pro market, backed up by ongoing work on efficiency. Those productivity initiatives really seem to matter. Plus, they're actively trying to engage customers in new ways. It definitely looks like they're positioning for growth, even if the overall economy is, well, uncertain.
Absolutely. Considering this aggressive pivot towards bigger pro customers and how confident they sound about cross-selling, it really makes you wonder, doesn't it? How might this whole strategy shake up the competition? What does it mean for the future of the entire home improvement industry for both DIY and pro? What's Home Depot's next move? Or the smaller guys? It's definitely a fascinating chess match unfolding.
Subscribe to my channel Report Stock.